Ladies and gentlemen, good day and welcome to the Dr. Lal Pathlabs Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Siddharth of CDR India. Thank you, and over to you, sir.
Thank you, Seema. Good evening, everyone, and welcome to Dr. Lal Pathlabs Q1 FY23 earnings conference call. Today, we are joined by senior members of the management team, including Honorary Brigadier Dr. Arvind Lal, Executive Chairman, Dr. Om Prakash Manchanda, Managing Director, Mr. Bharat Uppiliappan, CEO, Mr. Ved Prakash Goyal, Group CFO, along with Mr. Shankar Banerjee, CEO of Suburban and other group companies, Mr. Rajat Kalla, Company Secretary and Head of Investor Relations. I would like to share that a standard disclaimer here. Some of the statements made on today's call could be forward-looking in nature, and actual results could vary from these forward-looking statements. A detailed update in this regard is available in the results presentation, which has been circulated to you and is also available on the stock exchange website. I would now like to invite Honorary Brigadier Dr. Arvind Lal to share his perspectives. Thank you, and over to you, sir.
Thank you, Siddhartha. A very good evening and a warm welcome to everyone present on the call. We are here to discuss Dr. Lal Pathlabs Q1 FY23 earnings. The industry has more than adequate headroom to grow in FY23, where with an effective vaccination drive and improved patient care infrastructure, India has successfully met the challenges posed during the pandemic. Meanwhile, the Indian diagnostic industry is undergoing a transformation and is estimated to grow at a CAGR of 14% over the next 5 years. With very few barriers of entry, it makes a great ground for new entrants that include investors, entrepreneurs, and innovators. To remind you all, when COVID-19 pandemic hit in 2020, we were amongst the first private labs to be approved by ICMR for COVID-19 RT-PCR testing, and last year we performed over 32 lakh COVID RT-PCR tests. We have continued to serve our patients in the best possible manner, even with the challenges posed by COVID. I am happy to share with you all that we were adjudged the best star SME of the year by the prestigious Business Standard financial newspaper. For this, I would like to thank the senior management team and all the 5,000 odd workers in our organization, which is the oldest diagnostic lab chain in India, having been started in the year 1949 by my late father, Dr. Major S.K. Lal. We are all equally driven to achieve our large vision to be the most trusted healthcare partner enabling healthier lives. As we dealt with the COVID-19 pandemic's rapid spread across the nation over the past 2 years, we too faced both challenges and opportunities to improve our infrastructure, systems, and procedures. The public now has a greater understanding of the importance of keeping a healthy lifestyle, which is more vital. Since then, people have been monitoring their health and wellness better, which from a nation-building point of view is a very welcome step. Dr. Lal Pathlabs is committed to control the epidemic of non-communicable diseases or lifestyle diseases that are responsible for nearly 65% deaths in India. For this to take place, we shall further increase our organic network expansion and to create structural levers for driving volume growth. Our methodical network capacity creation nationally, investments in digital technology, Swasth Fit, and focus on better service parameters will prepare us comprehensively to lead this space for time to come. Today, LPL has become one of the most reputed laboratories in the world, with a network of 277 labs, 4,731 collection centers, and 10,599 pickup points serving across 1,500 plus cities with 5,000 plus tests and panels. We have a record number of 33 labs accredited by NABL and 2 labs by College of American Pathologists. As a forward-thinking company, Dr. Lal Pathlabs has been at the forefront of incorporating technology into its business strategy. By doing so, we can cut costs while giving our patients a smoother, more coherent experience. Companies like ours must adapt to stay ahead of the competition, given the speed at which the world is changing. India continues to be a grossly untapped market. For a brand like ours, there is a lot of room for expansion, so we want to take advantage of our position and create a mark for ourselves in the history. Thank you very much, and I would now like to hand the floor to Dr. Om Manchanda. Over to you, Om.
Thank you, Dr. Lal. Welcome everyone to Dr. Lal Pathlabs Q1 FY23 earnings call. I hope you and your loved ones are safe and healthy. I'll talk to you about the current trends as well as strategic focus of Dr. Lal Pathlabs. The Indian healthcare sector, particularly the diagnostic space, holds significant growth potential as was evident by the response of the industry to the pandemic. And organized national brands like ours have met these challenges without raising prices. The industry has seen entry of many new players. I foresee growth of organized sector both due to overall market growth as well as accelerated shift from unorganized to organized segment. Our customers appreciate the certainty of quality and effectiveness that Dr. Lal Pathlabs provides, which the unorganized players will not be able to structurally deliver. Going forward, we will continue to build and drive growth through the following. Number one, organic expansion of labs and collection centers infrastructure. Number two, through inorganic expansion route. Number three, use of technology to enhance customer experience and also provide value-added services at one level and drive internal process efficiencies at another level to achieve productivity. On organic front, the initiative of creation of hub labs has started yielding good results, especially in northern part of India. This will also give us capability to go deeper in Tier 2 and Tier 3 towns in large states like UP, Bihar, etc. As the markets get competitive, I foresee segmentation and differentiation will play a greater role in either maintaining or growing market share. For example, Swasthfit is seeing a good momentum and patients find greater utility in the offering. And we believe that it will further build up credibility of our brand. Similarly, I do see in super specialty business, we plan to focus on segments like oncology, autoimmune disorders, etc. On channel front, network of collection centers is going to play a very important role. We expect CC network to service all types of customers like home collections, walk-ins, hospital pickups, etc. Last year, COVID contributed nearly 400 crores to the company top line. That was roughly about 19% of the company turnover, of which nearly 55%, that is 221 crore, came from first quarter of FY22. From the current quarter, that is Q2 onwards, this overhang of large COVID base to a large extent is going to be behind us. And we hope to stay focused on more stable part of the business, that is non-COVID business, going forward from here. With that, now I would like to invite our CEO, Bharat, to continue this conversation. Over to you, Bharat.
Thank you, Om. I warmly welcome you all to this call today. I will now take you through all the business highlights.
focus on top line aggressively in this asset, we should really be able to improve our margins because the business is quite concentrated in city of Mumbai and the potential is quite high. So we just want to aggressively drive top line. That's our first priority.
Got it. And one last, if I may. So we've spoken about the competitive outlook in every call for the past 24 months now. This month there's been a new pharma player who's announced their plan to join the business. As we speak, there are now 3 pharma players along with many others. Are we really undermining the new players, that have entered into the market in terms of, how we're looking at the industry growing? What's the outlook on this?
So we are definitely not undermining any player who enters in the market. So I think there is definitely a higher competitive intensity that we have seen, especially in the last 24 months or 12 months. I think important thing is to know what is the sort of a long-term implication of what's really happening. It's my personal judgment, and I think India is highly under-penetrated, underserved from a diagnostic standpoint. Though there is no published data, but my sense is beyond metros and mini metros, diagnostics is very little right now. And more players entering into the market, they are going to drive 2 factors. One is, of course, acceleration of unorganized to organized shift, which is going to be very rapid. That's going to be, I think, number one effect I see of a very high level of competition. Second is penetration levels will go up. We'll see a lot of growth coming from tier 2, tier 3 towns. So I personally believe that this competition is good for 2 things. One is it will accelerate probably the market growth, even more for organized players. The second thing is the penetration levels in tier 2, tier 3 towns will actually go up, which will mean that accessibility and affordability of quality diagnostics will improve in this country. Now, obviously, for a company to do well, management teams will have to really figure a way out how do we maintain or increase our market share.
Thanks. I'll get back in the queue.
Sure. Thank you.
Thank you. We take the next question from the line of Sriram Rathi from BNP Paribas. Please go ahead, sir.
Yeah, thanks for the opportunity, sir. So firstly, particularly, if you can provide some details in terms of, how much of our revenue is coming from franchises as such, because it seems that the fees to collection center as a percentage of sales has got increased this quarter. So just to get an idea.
40%. Yeah. So maybe 40% plus is franchisee business for us. And right, but I don't think there's been a sharp increase on fees to collection center. It has been as per the normal trends.
I thought it has slightly come down this quarter.
Yeah. So, Sriram, fees to collection center is not where we have increased the revenue share for any franchisee, but the only thing where the business contribution is increasing, that's there. Yeah. But in this quarter, fees to franchisee is reduced as compared to last year.
Yeah, why it has reduced because of COVID, I think. Yeah. Okay.
I think one important thing to note here is, Sriram, that the contribution of a franchisee business to our total business is on the rise. Right. It went up. Now, I think as the COVID is receding, we are seeing a slight dip in that, which essentially means the patients are coming back to a bit of walk-in format. Now, obviously, we still will not go back to where we were before COVID, but I think it's going to settle down at a slightly higher level of contribution to franchisee.
Okay. Yeah. So my second question was on that only. Are we seeing the trend again reversing towards walk-in patients now, versus what we would have seen in the last few quarters?
I think there is a comeback to that.
Yes, indeed.
There is a comeback to that. Yeah.
Okay. Got it. And secondly, on the other expenses, I think that amount is higher this quarter on sequential basis when Suburban was there in Q4. So, should we assume this 105 crores kind of run rate to continue, or it could be fluctuating quarter on quarter?
So, Sriram, if you are comparing last quarter to this quarter, I think there are a few investments we have made, especially in this quarter. One is on digital side in IT, and the second is spend on marketing, which is A&P, is also high in this quarter as compared to last year. I think these are the two broad heads where we have spent little more in this quarter, and that's where you are looking that there is a difference between other expenses.
Okay, got it. So, I mean, that kind of high amount may not continue in the coming quarters. Is that fair understanding or?
So there are there are expenses which are we are continuously spending, especially on the digital side, and obviously on A&P it's quarter on quarter. But this is not something exception which we have spent in this quarter. These are normal expenses. Maybe IT on a special case we are investing in this quarter, but not otherwise.
Okay, got it. Sure, that's helpful. And
but
lastly,
certainly you should keep in mind that margins that we had seen during COVID times are not sustainable. So we are definitely going to settle down on what we used to do earlier, which was in the range of, I think, 25-26%.
Yeah.
That's the way it is.
Okay, so for the full year, it should be in that range, more or less.
We still don't know as to how it is going to pan out, but I think we are right now, the way P&L shape is looking like, it's definitely sharply down from what it used to be during COVID times. Right.
Okay, got it. And lastly, just coming back to the competition part, I mean, during this quarter, in the last, 3-4 months, what part of our business would have seen higher competitive intensity and might have some impact on the business, or, not that much so far?
I think the intensity is the brand awareness in general for many brands has gone up. So you don't want to lose out on top of mind awareness. I think that is where probably the right now heat is being felt, and that's where probably what Ved mentioned, that we had to spend a little extra marketing money to stay top of mind. I think one should know that for any brand has to remain top of mind, especially in the healthcare, because this is a need-based business. It is if you just drop on top of mind awareness, then you may tend to lose out. I think that's one area which I find is marketing spend will continue to stay up till the time this intensity dies down. That's the way I look at it. But from a business standpoint, I'm not sure, because many of these companies that are coming in are very routine business, because we have a test menu of 4,000 tests and a lot of high-end tests that not all these players have that kind of portfolio.
Right. Okay, got it. Sure, that's helpful, sir. I'll join back the queue. Thank you.
Thank you.
Thank you, sir. We take the next question from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead, sir.
Price volume. I think.
Sorry, Shyam, you have to repeat that. I think we missed it.
Yeah, sorry. Yeah. So let me repeat. I'm looking at the Dr. Lal own non-COVID sales, excluding Suburban non-COVID. I think you said it grew 15% YOY.
point of patient's care, which is the home. So they are able to now add on tests for their spouses or patients who are not getting tested, so that we get more from the same visit. So a lot many more initiatives in the pipeline as well, but we're happy with the progress we're making on the home collection front, leveraging technology, Prakash.
Sure. And, as a consumer, I see a lot of proactiveness, at least in the Mumbai market, where, there are now calls for new test or a last test done, due date. So, coming to the question, which you were hinting at of cross-selling and upselling, what is this approach we've taken? Is it, across newer geographies, or is it just Mumbai? If you can highlight some clusters where we are trying to, follow this approach, because I see a lot of activity, at least in Mumbai.
From Lal Pathlabs or competition?
Yeah, Lal Pathlabs. I'm talking Lal Pathlabs.
Yeah. So, we have an approach on MarTech, how we leverage data for marketing programs, but we just have to be cautious on the other side as well, because there are privacy-related issues and so on. So it's a fine balance, but yes, we are getting, like I mentioned in the opening comments, we had a very aggressive, what I call activation program around both B2B and B2C in this quarter, which will continue, and some of this are part of that effort.
Okay. And that is specific clusters or cities which you've identified?
Yes, we do have strong points where we want to push the levers here.
Okay. And lastly, how are we managing attrition, if any, due to increased competition and any inflationary pressure or input cost increases we are witnessing, which could be a worry, given the general inflationary environment?
Yeah. So the good news on attrition, inflation is, yes, visible in our system because fuel costs have gone up and so on. We have been looking at internal efficiencies and getting those efficiencies into picture. And that is the reason, one of the reasons why we're able to keep the P&L healthy without taking a price increase. Attrition in particular, nothing substantial, I would say, at this stage. Frontline attrition continues at the previous rate, no significant change. And, because we are now more a systems-driven company and a technology-driven company, dependent on people per se, specific individuals, is far lesser than what may have been many years in the past.
We are also seeing another trend because the COVID business is down 90%, not only for us, for the entire industry. So there are a lot of, the reverse also is true.
Okay. Understood. Thank you. All the best.
Thank you, sir. We take the next question from the line of Bharat Shah from ASK Investment Managers. Please go ahead, sir.
Yeah. Hi. When there was a mention of growth drivers, one of the major ones that was highlighted was inorganic. But when we look at kind of recent acquisition, Suburban, where price paid is a multiple of revenue, margins are rather very low, not just compared to Dr. Lal business per se, but per se rather inferior margins. Therefore, is this a kind of insecurity race that we are running? Because growth for the sake of growth is a philosophy of cancer. It doesn't add to the value.
Yeah. So are you finished?
Yes.
So I think you're making a very good point, and I value that. I think we have never looked at revenue, any organic sort of option to increase our revenue. We've always looked at any inorganic asset from the point of view of entering into that market. I think in our judgment, we felt that Mumbai is a highly competitive market. On our own, we have tried in the past, and we believe that on our own, we couldn't have really gained that kind of scale in that city without any inorganic sort of option. That was the reason why we looked at Suburban. Now, coming to your question of, yes, we realize that Suburban has lower margins. Unfortunately, in our judgment, maybe COVID fell much sharply than what we had anticipated because last 2 years COVID was very high in Mumbai, especially for Suburban. And I think probably we didn't anticipate that within 3 months this decline of 90% would happen. So that means with that fall, margins have gone back to what historical margins for this company was. But having said that, what it has told us is that if we are able to at least double the sale of this business from here on, margins should actually go up to, if not to our parent company level, but at least definitely close to 20%. So all we need to do is just grow the top line, and we feel we should be able to do that in the next 2 to 3 years. But having said that, if we had not taken this option on our own, we could have done that. I think in my personal view, it would have been very tough for Dr. Lal Pathlabs. And we can't ignore not only just Mumbai, but I think state of Maharashtra not being present. That's been the reason, but otherwise there are a lot of assets which come for to be acquired. We just don't chase them at all because unless it makes sense for us, we don't go to those markets. For example, there were a couple of assets available in the eastern part of India. This would have been an asset for us maybe 6-7 years back, but now our east business is much more stable. So we are not looking at anything in the east. There are lots of businesses that come to us from northern part of India. We don't look at any asset at all. I think today, if I look at any white space which is left in southern part of India, we are seriously evaluating if we want to drive that now organically, if not inorganic. But yes, you're right. But one priority that we have is that in order to tap the overall growth of the diagnostic market in India, we need to have a wider footprint compared to what we have today. I think the whole objective of Suburban was to how do we establish ourselves in West, especially from a presence perspective. But let's see how it goes. But we are still very hopeful that in 3 to 5 years' time, we should be able to do something with this asset.
So, am I to interpret that Suburban was a bit of a one-off acquisition and was a strategic imperative, which will eventually, after you work through it, would also make financial sense compared to the price that you paid for it?
Yes, it's a very, very strategic one. Whatever we have paid here does not stand good for any other acquisition that comes. So I don't think we will look at any other asset this way the way we have looked at Mumbai.
And eventually it will make financial sense as well.
I think so because last year I think this company did close to 300 crore. Of course, not in net terms. At that, or maybe even FY21, it was nearly touching 300, and the EBITDA was in the range of 20-odd%.
Yeah.
So of course, half of that was COVID, and now COVID has disappeared, so it has gone back. I think it's fairly well placed infra. We also know where are the levers for cost cutting in this asset. I think we should be able to do that. It may not happen within 3-4 months or 1 year's time, but I think over a longer period of time, this asset I am very sure will turn out to be good for us.
My second question was, in the opening remark, Dr. Lal alluded to 14-15% growth rate. You also referred to it in your address. And we talked about a huge untapped opportunity apart from conversion highway available from unorganized end up chasing shadows without achieving concrete value creation. In a sense that even if we grow the top line at 15 or 18%, but if it is not profits don't grow meaningfully in sync with it, then it may end up, kind of wrong definition of the growth. And I would say both are important, the top line as well as the cash flow growth.
So I agree with you. I think you're making a very good point. Revenue for the sake of revenue is not good if there is no bottom line, right? Then we are running a commodity business. So it's a fine balance that we'll have to maintain. I think this question also got asked in the last quarterly call as well. Somebody asked me, will you actually chase these lowest price points that are happening in the market? I think clearly the answer is no. We will have to really very carefully maneuver this current market situation and find a bit of fine balance between revenue and bottom line. And I think the point that you're making is absolutely correct.
Okay. Thank you, and all the very best.
Thank you. We take the next question from the line of Shalini Gupta from East India Securities. Please go ahead.
Good evening. So you're facing so much price competition and so many strong players are entering the industry. I was just wondering if you've considered setting up a diagnostic center in collaboration with hospitals, say Lilavati. I mean, Lilavati is what comes to mind, but so many others like Lilavati, or there's so many hospitals in Bombay, for example. I mean, you would get a captive set of patients, and what is the downside of in setting up such centers, and how easy is it to set up such centers?
No, it's a great idea. Thank you for giving us input. We call it a hospital lab management segment, and we continue to look for these opportunities. We'll probably refine this further and see how we gain extra sort of a revenue line from this side of segment, this side of business. Thank you for your input.
I just wanted to check how difficult is it to set up such centers? I mean, the person running the hospital may not want to.
Yes. So now let's put ourselves in the other side's shoes. Now, if the margin from this business is very high, they are reluctant to give it to you because they want to capture everything with them. Second is, pathology is not a very asset-heavy business, so barrier to entry is low. They actually want you to run their CTMR business, not pathology business. Second thing is, even if they decide to give it to you, you also run a risk of receivables because 3-4 months down the line, he won't pay you the money. So it's not a very easy business, but having said that, I think this is definitely a large business. I think close to 35% of the industry is lying inside the hospital. 57%.
Yeah.
So we can't ignore this segment, so we'll definitely keep looking at it, but we'll have to do probably a lot of hygiene check before we sign up any contract with the hospital.
Okay, but you're open to this.
No, we do that.
Yes.
It's part of our business.
Yes.
Like we have close to
40.
40. We have 40 such centers inside the hospitals.
Okay.
Yeah, this is an integral part of our business strategy.
But Shalini, if you know somebody in Lilavati Hospital, you can introduce them to us.
No, I don't know anybody, sir. I was just wondering because I happened to visit a competitor's lab in a hospital. This is a public hospital, so obviously it was not very clean and all, not the kind of thing you would expect when you go to, say, suburban. But the number of patients there is amazing. So, and also I believe you don't have to pay any referral fees to the doctors, and you don't have to pay for space. So I was just wondering, why is not everybody doing this more aggressively?
Because some of these guys don't pay up after 6 months.
Okay. All right, sir. Thank you so much.
Right.
Thank you, ma'am. We take the next question from the line of Mr. Shaleen Kumar from UBS. Please go ahead, sir.
Yeah, thanks for the opportunity. So Also, we have noticed one thing in our analysis that the competition from digital platforms is largely available discount. Basically, deep discounting is in 5 tests and then another 5 it drops and then substantially it drops after that. So basically, it's largely in top 10 or maximum 15 tests. So we want to understand what kind of revenue proportion, if any, not for you, even if you're industry or organized player, rather, you can give us, right? What kind of revenue proportion does this test account for you, top 10, 15? Any sense possible to get?
Yeah, I think your observation is right. I've gone through your reports. It's very nicely written. And it's basically, it's just making the news. It's like you go to a shop 50% off, and you walk inside, you suddenly find those 50% of few items lying in the corner. So it's the same thing happening here as well. For few tests, they are all kinds of prices. But overall portfolio of diagnostic, if you look at, that's much wider. Offhand, I probably may not have that number with me, but I think your report suggested 30%, right, of these 10, 15 tests.
Yeah, so basically checking from various participants.
Yeah, so my input here is, probably may not give you an exact answer on that, but my input here is there are a lot of tests which are hematology driven. And there is a manual component in those tests. A lot of tests which are machine driven, especially biochemistry, that's where the prices are lower. But wherever the human component is high in any test, you can't drop prices just like that. And they are not sustainable at all. And for any of these companies to provide to increase the scope of testing, they will have to start incurring those costs, which actually a full-blown company like us or any other similar competition will do that. And at some point in time, at the end of the day, diagnostic is not about these 10 tests. Diagnostic is about diagnosing a disease. So you need to have an entire repertoire of testing rather than just about 10, 15 tests. While this will definitely grow screening side of testing, this will also grow the overall market. But we believe that if you screen 100 normal people, and 20 of them or 10 of them actually may fall into the funnel of medical testing, which essentially means the market is likely to grow faster.
Understood. Also, sir, intuitively, is it the right way to think that prescription-driven tests are unlikely to go to the platform? And because of multiple reasons, you may not get the booking now, or customer is not sure about, or patient is not sure about buying the test online, etc. That's one bit. So your view on that. And second, if you track how much of your testing is prescription driven and how much is non-prescription driven?
So I think it will be unfair to say that medical things will not go to them. If some of them actually widen their test menu, of course they can participate in this segment as well. Mm-hmm. But I think one thing I want to highlight is that this is not a business where like a daily use item, it's not even monthly use item. I think last time I mentioned that average visit for patient in our portfolio combined together is not even one per year. So you might just show a lot of trial generation, you do a lot of these camps and promotion driven sales, but suddenly you will find yourself next month nobody's there. But then, so it's not a very high frequent purchase item. And for any company to show results, it is definitely 2 to 3 years of journey before they actually say, yes, we have arrived. So I think it will take a lot of time.
Yeah, Shalin, wait here. So this is, on intangibles where we have, capitalized intangibles for Suburban.
Right.
And that intangible, apart from goodwill, is we are writing over a period of 8 to 10 years. So roughly, this is 12 crore in a quarter. Will continue for some time.
Understood. Yeah, got it. All right. Thank you so much, and best of luck.
Thank you.
Thank you, sir.
Thank you, sir. We take the next question from the line of Sayan Mukherjee from Nomura. Please go ahead, sir.
Yeah, thanks for taking my question. Sir, on the, the organic growth path, can you throw some light? How should we think about, say, if you have been increasing your lab or patient service centers at a particular rate, will we see a step up there? And if yes, any geography you have in mind, you want to sort of go deeper in north and east, and sort of look for acquisition in south. If you can just throw some light on your organic, growth strategy that you're thinking for the next 3 years.
So I think our organic strategy has to be that we improve our service level, at the same time also not increase our overhead structure. In the past, we've been opening a lot of these satellite labs, but each lab brings in close to crore and a half of operating costs as well. So we will look at judiciously the model of hub labs. I think we talked about this in earlier calls, where we increase the test menu in the region now, and that does two things to us. One is it gives us the ability to go to tier 2, tier 3 towns, because otherwise, to service tier 2, tier 3 towns, you have to bring that sample load to Delhi, and that will affect the service. So we want to go closer to the markets by opening more hub labs and maybe reducing the number of satellite labs, but opening more wider test menu labs, which we call it hub labs, and then improve our logistics network so that we are able to service the market. So that's our strategy. I think your second question was priority in terms of markets. Clearly, I think the rest of North, which is UP, Bihar, Jharkhand, Odisha, even eastern part, are definitely growth markets for us. So we want to really make sure that we aggressively increase our presence. Southern markets are giving good response to our organic strategy. We'll have to probably wait and watch whether it's sustainable. If that works, then we'll go south as well. But right now, that is still open. To start with North, rest of North will be number one priority for us.
Okay. So my second question is around competition. Basically, we are seeing new entrants in the sector. So at one end, you have the online players who may not have that sort of equity on the healthcare side, but then you have the pharma companies which are well-known names. They have the doctor connect, and they're trying to drive the business through that route. So they have the brand, and they also sort of have the funding available from their domestic business. So in a sense, what is a bigger threat to the industry for a player like Dr. Lal in your view?
So I look at both opportunity as well as threat. I think opportunity I talked about. I think some of these organized competition coming into the market is good for the industry. It's good for the industry because it creates a level playing field. So far, we've been up against a lot of these small-time players where they have virtually no overheads. And many of these companies that you mentioned will have to have overhead structure which is similar to ours. So it's, to my mind, now we are going to play in a field which is level playing. So that, I think, is a big upside to this. Second big upside is that a higher level of competition is technically there. I look at all this money which is being spent in the market is all marketing dollars. I think on a standalone basis, I wouldn't have been able to spend that kind of money. So the more activity that happens, it will grow the market. So that's another big positive. I think the only challenge is now, as you said, do we stand to lose to these guys? There may be a bit of market share shift that will happen depending on who has got strength in which market. I think that's where our team really will have to be smart enough to run the business efficiently so we are able to compete with them in terms of our efficiency. Second is carefully pick and choose our battles in terms of geography. And we believe we are very well placed in northern eastern part of market on the organic front. And that to my mind is roughly half of the country. And also remember, we have a network of 5,000 collection centers and 270 labs and 10,000 pickup points. It's not built in just overnight, one day. It has taken so much of time. And from my personal experience, I can tell you that this is not a frequently purchased item where people will be coming month after month or week after week. So to sustain 1 year business, I think all the new customers have to be acquired. So it's all it's operationally going to be very challenging. So to me, that actually is a bit of an insurance to us because operational excellence required in this business is huge. And also remember, while we may be a facade medical company, but inside we are a huge logistics company. And while you may have doctor connect at one end, but to run this operation, those skills are very, very different than at least running a manufacturing setup. But having said that, overall market, I believe will definitely grow.
Yeah, thanks, sir.
Thank you, sir. We take the next question from the line of Shayantan Maji from Credit Suisse. Please go ahead, sir.
Yeah, thank you for the opportunity. So my question is that, how much of the total revenues do we get from routine tests, especially in the metro markets? The reason I'm asking is that the impact of competition would be more on routine tests and maybe the wellness packages. So, how much do these comprise as percentage of our revenue?
So this definition is also.
I don't think we have readily this data available, and it's also very loosely defined. I would actually say 21% of our first contribution. Maybe you add another 8-9%, close to 30-odd% would be the figure.
Okay. Okay, thank you. And second question is that as per the last disclosure, North India total, I think, constitutes around, say, 65% of the total revenues. So while Delhi NCR is 35%, the remaining 30%. So do we expect a double-digit growth over there? So Delhi NCR, I understand we already have a high market share, so it will be high single-digit. But for rest of North India, do we expect maybe, teens growth?
Yes, indeed. Absolutely. So if we are 13, 14, 15% growth for the company, and Delhi NCR is single digit, so obviously the balance has to be close to 18-19% for rest of India.
Okay, and this includes the rest of North India as well, right?
Okay, yeah. I think maybe it's fair to assume rest of India because, I probably would tend to agree with you, rest of North India.
Okay. And a couple of data-related questions. So first is, what is the Ind AS benefit that is there in reported EBITDA? And second is, what is the Esop, run rate that will be there going forward? So I understand we give Esop and CSR, but if we exclude CSR, what is the Esop run rate that we will have?
So in the past, it was used to be 24-25 crore per annum. I think immediately last year it was little high because the large grant was given at a higher price, and that's where the charge was higher. But if you see, a couple of years, it was in the range of 24-25 crore kind of charge.
In India?
Yeah, India's impact, it is, started 4 years back. So pre-India's, we used to have 25-26% kind of margin. After India's, it, revised to 26-27%. So about 1% or so has, impact of India's. So that is all due to India's.
Okay, thanks. And for the ESOP, so we expect run rate to be like 25 crore per year going ahead as well, or will it be at a higher rate as we have right now?
See, this changes year on year because depending on price on the day of grant, I think historically what we have seen is that it has gone as high as 32 crore last year. It was also one of the years, if I remember, was even 6 crore. I think the number that Ved is quoting is if you actually look at a sort of where is a settled down number average for the year is our estimate is close to about 23 to 25 crores.
Yeah.
But year-on-year basis might just change up and down.
Okay. Thank you so much for answering questions.
There is also a bit of a reversal that happens as somebody resigns, so options come back to the pool. So it's a very dynamic number, but I think it's fair to assume that currently at 2,000 crore, give and take here in the top line, you have close to 1.2% of Esop charge.
And this is going to be sustainable for like foreseeable, say, next 2-3 years, right? This Esop scheme will continue to, it's part of our regular business now. I mean, it's part of the...
Yes, if this is the kind of competition remains, I think it will stay there.
Understood. Okay, thanks. Thank you for answering questions.
Thank you, sir. We take the next question from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. A couple of questions and clarifications. So, what I understood was 13 to 15% base business growth, X acquisition is what you're guiding for. Would that be correct?
Yeah, I think that's the way it looks like as of now. Yeah, that's our best case estimate.
Okay, and this quarter, 25% margin is with 12% of Suburban. So A is, and this is despite higher costs on IT and some expansion and advertisement that you talked about. So how do you think your margins, I mean, this is clearly the base level margins. Would you agree to that? And how do you think over the year, financial 23, this margin should settle?
Can you say base?
So see, we were growing, our margins were, pre-COVID level was in the similar range, 25-26% or around 26%. As far as I think if we are able to grow mid-teens, I think we are able to maintain these margins.
I think the sweet spot for this business is about, I think if you are able to grow between 10 and 12%, my sense is remains there, assuming there is no pricing pressure, we should be able to maintain. But since the dynamics of the industry keep changing every now and then, but I think if any business is able to deliver 10 to 12% growth on an organic basis, we should be able to maintain this margin. This is my math currently suggests.
Okay, so what I understand is this IT related as well as this advertisement related expenses are here to stay on a quarterly basis.
Yeah, absolutely. Yeah, we can't let the pressure down on brand awareness. So in this kind of intensity, so I think they are here to stay for some quarters.
Okay, and with some improvement in Suburban, which you are guiding, over next couple of years, you're saying to sales to double. I think next year you're expecting sales to double.
Right now the challenges are of different nature because Suburban is a fairly routine company by design. We want to invest behind back end and increase our test menu. Hopefully we'll have some news to talk about launch of our lab in Mumbai next quarter. That will consume some cost. Obviously, whenever you do a transition of this kind, there is a stability issue in the management team, management structure. So currently we are in that process of making sure that that is taken care of. I think Suburban will be more company-owned, company-operated infra. It has to move towards franchisee-driven infra. So that also will take time. I think next at least 3 to 4 quarters, I want to make sure that we get the fundamentals right. And hopefully if we get the process right, outcome has to be right. So that's the way we are looking at it. So FY23, I would give a team enough sort of elbow rather than put pressure on profitability immediately.
All right. And is there any progress on the online alliances? I think last quarter you said that you might evaluate something specific for online alliances. So anything to talk about at the moment?
I think online alliances probably will do that, but I think they are also figuring out whether they want to do completely on their own or they want to partner with a lot of players. I think there is a bit of a whether they are following aggregator model or they are doing their own sort of a business. I think it's a bit of a, I really won't say that the entire model has fallen in place. My personal view is to scale this business, you need partnership. I think to scale on your own multi-city model will actually be challenging. Let's see what happens this quarter, maybe next quarter, because the COVID dependency is virtually come down by 90%.
Yeah.
I think throw up new dynamics in the industry, which will have to wait for another 3 to 4 months.
Fair enough. Lastly, on the pricing side, there are some ads coming with 80-90% discounts, and these are, I would say, routine tests. But on a general basis, though you mentioned you're not reacting or your prices you're not raised or reduced prices, your action is on the advertisement and expanding the hub and spoke model. I mean, is there anything else that we are doing to keep the the volume intact or grow the volumes?
Yeah, I think one more thing that probably is likely to happen is that within the portfolio of routine tests versus specialized tests, one may look at price rationalization. Some of our high-end tests may be underpriced and some of our routine tests may be overpriced. We'll do it in a manner that it doesn't jeopardize our overall margins for the business. But we will look at case-to-case basis, those kind of things as well. I think directionally, in some ways, it's already started happening because the contribution of SwasthFit is going up. So in a way, realization per test on the routine tests is coming down. So some bit of it will have to be adjusted towards for specialized business. I think those things will fall in place. That may be another additional stuff which I would add to the list that you just mentioned.
For even clarification, SwasthFit would be wellness, right? So those would be mostly routine.
I actually won't call it wellness. I think it's probably a wrong term to use because wellness sounds as if the patient is completely healthy. I think it's upgrading of those 2 or 3 tests to a bundle test portfolio. So I think it's a mix of illness and wellness together rather than only wellness.
Okay. So you're saying prices there you could just a little bit rationalize and increase one with some of the specialized ones.
I don't mean rationalization. I'm just saying realization per test because SwasthFit has a lot more number of tests in the package.
Okay.
See, what you and I look at normally is the revenue per patient, right? But what is also important to look at revenue per test.
Mm-hmm.
That to me, when you look at SwasthFit revenue per test, directionally it is lower than if you order individual tests.
Okay. And how about looking at EBITDA per test or EBITDA per patient?
EBITDA per patient may be higher, but EBITDA per test may be still lower because your overall realization per test is going down.
Fair enough. Thank you. Thank you. All the best.
Thank you very much, sir. We take the next question from the line of Dinesh Pathak from White Oak Capital Management. Please go ahead, sir.
Yeah, thank you. Just trying to understand the non-COVID ex-Suburban, patient growth. So you said revenue growth was 15%, like-to-like, non-COVID ex-Suburban. And then you gave some numbers on realization, 652 and 707. So that is like an 8% growth in realization per patient. So that 15% revenue growth and 8% realization, that leaves like a 6-7% like-for-like patient growth. But you also talked about a 12% growth like-to-like. So can you just help me reconcile?
So it has impact because in Suburban we have little higher realization or even higher realization as compared to our own company. So these patients include Suburban as well, which was not there in last year same quarter. Apart from what Bharat was mentioning about the mix and all.
This non-COVID
652 is obviously last year base is a clean realization number, right? 15% is a clean revenue growth like to like. So 707, which is the realization this quarter, you're saying this is blended realization with Suburban. So can you help us with the, like a clean realization ex Suburban per patient so we can?
Okay. Understood. I think that's about 2% growth, right?
Yeah. So no, RPP growth is 2.5%.
But revenue per patient?
Revenue per patient, I don't have a number exactly right. I have the RPP. So RPP,
RPP ex Suburban.
Yeah. RPP ex Suburban is. So we can come back separately. You can connect with me.
Okay. I'll talk to you with.
But I think mix-up is basically the 707 figure is including Suburban business also.
Understood. So, but this would not be a whole lot different, right? Because you said last year we were closer to 690 or something. So even if this is, let's say, instead of 707, this is 690. Then also it's like a 6% realization growth. So patient growth on the like-for-like this thing is only 9%.
There's 684
of 12%.
684. Yeah. So I think we'll come back. Sorry, I couldn't get your name. You are?
Dhiresh from White Oak. I know. I'll get in touch with you.
Yeah, we'll touch base. Yeah, we'll touch base. Thank you.
The other question I had was on this. So Suburban, you're saying so. Realization per patient is good in Suburban. Gross profit is increasing with Suburban. So I'm assuming, the gross margin is not an issue. So the issue is you're saying the network is COCO instead of franchisee operated, and that is not properly utilized. And that you are going to transition to franchisee owned. Is my understanding correct?
We'll do both. So because in any case, labs are, even Dr. Lal Pathlabs also company owned, company operated. So we will probably make the assets sweat more, especially existing ones. And the network business which comes through franchisee, that's where our focus would be. Because I think Suburban traditionally has been focused on walking into the labs. And they have been investing more in the lab infra, which for me, compared to Dr. Lal Pathlabs, is slightly, there is a scope to improve productivity there.
Okay, but this will take time. There's no option to right size it like properly because you can always add franchisee centers later, right? Labs, and they were quite concentrated in a few cities, right? So I'm assuming.
We probably, I don't think that's what I keep saying, that I don't want to have the pressure of quickly making this margin look very similar to industry margins or Dr. Lal Pathlabs margins. I think I want to make sure that our top line grows in these places. And then only automatically our output-input ratio will improve if we increase our top line, which we are fairly hopeful that we should be able to do that.
Okay. Last question. What percentage of revenue is from aggregators? I understand it'll be very small, but just to get a sense.
We had
less than single digit.
Okay, not in single digit. Single digit, which means it's 2 points something.
Okay. Thank you.
Thank you. We take the next question from the line of Nikhil Chaudhary from Chris PMS. Please go ahead, sir.
Yeah, hi, sir. Thank you for the opportunity. And, sir, wanted to understand on the lab sharing arrangement that we may have with Suburban. So, is it something that we are actually doing it, or is it in plans that we'll be using our network, our lab network, and taking the samples from the Suburban? Because I saw an ad of Suburban expanding in Indore also. So wanting to understand, instead of setting up Suburban lab, will we be utilizing our own labs for the Suburban patients also?
Yes, it makes sense. It's one company, right? We will definitely look at back-end infra synergies. So you will, I don't think it makes sense to put another lab for Suburban. We are not competing with each other.
Correct.
So we'll figure a way out where one lab is able to service both the brands.
Understood. And sir, any thoughts on probably a question to the earlier participant where probably due to the rising competition, Esops probably can help in retaining even mid-level guys. So because the competitive intensity is increasing and they may want to take some employees from us because we have been there in the industry for a long time. So any thoughts around that? Like, have you been evaluating or any other strategies that you are employing to probably retain the employees?
I think employees are smart enough to evaluate such opportunities. I've seen many of them don't fall for short-term raises in salaries. They also know the sustainability of the whole idea. So, and many of them who've actually gone from us have been wanting to come back as well. So I think some of them are really smart to figure out. They know the careers are 30, 40 years long. They're just not 2-3 quarters. So,
the last question probably I asked it in earlier con call also, sir. Ads in paper, have you been evaluating because something probably has created noise has been the ads in the paper. So why can't we spend, because we have cash on the balance sheet, spend some probably ad on the front page and get some traction for Dr. Lal also. Just asking you guys probably can have a thought around it to have the participation even in the T20 or IPL matches, which actually are good probably the areas of getting customer attention. So just probably wanting your thoughts around that.
Maybe we can sit separately and discuss this. I think many of us, all of us have worked for a FMCG company as well. So this business is, by the way, it's still a medical business. I think very, very hyper-local, city-based. IPL is going all over the place. Your presence is mainly in 2 or 3 years, 5 cities. You end up spending your whole country. I think we can sit and discuss that. And this business is not about you see a hoarding and you go and get yourself pricked next day. It doesn't work like that. So I think ultimately you are trying to solve a problem which is a medical problem. It's a very need-based. And it's a 3-way process. You still have to engage with the medical fraternity. And by the way, you also should know that in medicine, soliciting business this way is actually not a very appreciated format for science.
Understood, sir. Understood. Thank you so much, sir. That's it from my side, and wish you all the best.
Yeah, thank you.
Thank you, sir. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for closing comments.
Thank you everyone for being with us on this call today. I wish you and your families remain safe and healthy. I would now request the moderator to close the call. Thank you.
Thank you. On behalf of Dr. Lal Pathlabs, that concludes this conference call. Thank you for joining. You may now disconnect.